What if I told you the financial system is not just something that happens around you, but something you are already inside of every single day, whether you realize it or not? Every time you earn money, spend money, save money, pay a bill, or even take a loan, you are interacting with a massive global system that is constantly moving money, creating money, and shaping how wealth is distributed. Most people never stop to question how the system actually works. They just follow the path that seems normal. Earn, spend, repeat, save a little if possible. Try to stay out of debt. Work harder when money gets tight. But here is the surprising part. That simple approach does not reflect how the financial system actually operates at all. The truth is, the system is not built around how hard you work. It is built around how money flows. And more importantly, who understands how to direct that flow. Think about this for a moment. Have you ever wondered where money actually comes from? Not just the money in your wallet, but the entire supply of money in your country. Is it just printed by the government? Is it created through work? Or is there something deeper happening behind the scenes? What if I told you that most of the money in the system is not even physical cash, and it is created digitally through loans and banking activity? That means money is constantly being created and destroyed depending on how the system is used. Now ask yourself another question. Why do some people seem to build wealth much faster than others, even when they earn similar incomes? Why do some individuals struggle to get ahead, while others appear to use money as a tool to generate even more money? The answer is not luck, and it is not just about working harder. It comes down to understanding how the financial system actually functions. See, most people are taught to think about money in a very limited way. They are told to save, to avoid risk, and to slowly build wealth over time. And while those are not bad habits, they only represent one small part of the system. Meanwhile, the larger system is operating on principles that are rarely explained in simple terms. Banks are lending money and creating new money in the process. Governments are influencing the economy through policies and interest rates. Businesses are using capital to grow, expand, and increase their value. And investors are using assets to multiply their wealth in ways that most people never fully understand. So the real question becomes this: if the system is already working this way, why are so few people actually taught how to benefit from it? The answer is simple: because understanding the financial system gives you power. And when you understand how money flows, you can start making decisions that align with how the system actually works, instead of fighting against it. In this video, we are going to break down the financial system in a way that is simple, clear, and practical. No complicated jargon, no confusing theories, just a step-by-step understanding of how money moves, how it grows, and how it shapes the world around you. Because once you see the system for what it really is, you will never look at money the same way again. The biggest problem is that most people are operating with a completely incomplete understanding of how the financial system works. They believe money is something you simply earn and keep, and that the safest way to build wealth is to save as much as possible and avoid financial risk. While that sounds logical on the surface, it does not match how the real system is designed. This misunderstanding creates a huge gap between how people think money works and how it actually works. Most people think their income is the main driver of wealth. They believe if they just earn more, they will automatically become financially secure. So they focus heavily on their job, their salary, and maybe saving a portion of what they earn. They try to reduce expenses, avoid debt, and build a small savings account as a safety net. But here is the issue: the financial system is not designed to reward only saving. In fact, if you only save money without investing or using it in other ways, your money is slowly losing value over time due to inflation. Prices increase, purchasing power decreases, and the money you thought you were safely holding becomes less powerful each year. Another major misunderstanding is the role of banks. Most people think banks are just safe places to store money. In reality, banks are active participants in the financial system. When you deposit money, the bank does not simply keep it in a vault. It uses a system that allows it to lend out a large portion of those deposits, effectively creating new money through loans. This process is one of the core mechanisms that keeps the financial system running. But most people never think about this. They see their account balance and assume that is the full picture, without realizing that their money is part of a much larger flow. Then there is the fear of debt. Many people are taught that debt is always bad. They believe borrowing money is something to avoid at all costs. While it is true that mismanaged debt can be dangerous, the financial system itself relies heavily on debt. Governments use debt to fund projects, Businesses use debt to expand operations. Investors use debt strategically to increase their potential returns. The problem is not debt itself. The problem is how people understand and use it. Because of these misconceptions, many people miss out on opportunities that are built into the system. They avoid investing because they think it is too risky. They avoid borrowing because they think it is always harmful. They avoid learning about financial tools because they assume it is too complicated or only for experts. Meanwhile, others are actively using these tools to grow their wealth. They understand how money moves. They understand how to use assets, credit, and investments to their advantage. And as a result, they are participating in a completely different version of the same system. This creates a clear divide, not necessarily between rich and poor, but between informed and uninformed. The financial system itself is neutral. It does not favor one person over another based on effort alone. Instead, it rewards knowledge, strategy, and understanding of how money flows. Now let us break down the financial system in the simplest way possible so you can clearly see how everything connects. At the center of the financial system is one key idea. Money is not just something you earn. It is something that flows, expands, and contracts depending on how it is used. Start with banks. When you deposit money into a bank, it does not just sit there waiting for you to withdraw it. Instead, banks use a system that allows them to lend out a large portion of those deposits to other people and businesses. Here is what that means in simple terms. Your money is pooled together with other deposits. The bank keeps a small reserve and lends the rest out as loans. Those loans go into the economy and are used to buy homes, start businesses, or fund projects. This is how money circulates and helps the economy grow. When a bank gives a loan, it is not just moving existing money. It is actually creating new money in the system through digital credit. That loan becomes new purchasing power that did not exist before. This is one of the most important and least understood parts of the financial system. Now let us talk about interest. Interest is the cost of borrowing money. When you take a loan, you agree to pay back more than you borrow. That extra amount is how lenders make a profit. It also creates a structure where money naturally flows from borrowers to lenders over time. This is why financial discipline matters. If you borrow without a plan, interest can work against you. But if you borrow strategically, it can help you access opportunities that you would not be able to reach otherwise. Next is investing. When you invest in something like stocks or real estate, you are putting your money into an asset that has the potential to grow over time. Companies use the money they raise from investors to expand their business. In return, investors may receive dividends or an increase in the value of their investment. This is where wealth can start to multiply. Instead of your money just sitting idle, it is actively working inside the system to generate more value. Another key part is inflation. Inflation is the gradual increase in prices over time, but another way to think about it is the decrease in the value of money. When more money is created in the system, each unit of money becomes slightly less valuable. This is why holding large amounts of cash over long periods is not always ideal. Even if your balance stays the same, its purchasing power can decrease. Now, bring all of this together. The financial system works like a cycle. Money is created through lending, it circulates through spending and investing, it earns interest, and it is influenced by policies that control supply and demand. If you understand this cycle, you can start making smarter decisions. The key idea is simple. The financial system is not random. It follows patterns. And once you recognize those patterns, you can begin to position yourself in a way that aligns with how the system already works. To truly understand how the financial system works in real life, let us look at a few examples that show how money moves at different levels, from global institutions to individual strategies. Start with large corporations. Companies like Apple and Amazon do not rely only on the cash they already have to grow. Instead, they use financial tools to raise capital from investors and institutions. One common method is issuing bonds. A bond is essentially a loan from investors to a company or government. When investors buy bonds, they are lending money in exchange for regular interest payments. This allows companies to access large amounts of money without giving up ownership. With this capital, companies can build new products, expand into new markets, and increase their overall value. In return, investors earn steady income from interest. This is a clear example of how the financial system connects borrowers and lenders in a way that benefits both sides. Now let us look at governments. Governments use something called sovereign debt. They issue bonds to raise money for public projects like infrastructure, education, and healthcare. Investors, including large institutions, buy these bonds as a way to earn stable and predictable returns. This shows that even governments rely on borrowing as part of the financial system. Debt is not just something individuals use. It is a core part of how economies function at every level. Next, let us look at how central banks influence the system. Institutions like the Federal Reserve or other central banks control interest rates. When interest rates are lowered, borrowing becomes cheaper. This encourages businesses and individuals to take loans, invest, and spend more money in the economy. When interest rates rise, borrowing becomes more expensive. This slows down spending and can help control inflation. In this way, central banks help regulate the flow of money to keep the system stable. Now bring it down to an individual level. Imagine a person who owns stocks in a growing company. As the value of those stocks increases, their net worth increases as well. Instead of selling those stocks, they can use them as collateral to borrow money from a bank. This means they can access cash without selling their assets. They still own the stock, and if the value continues to grow, they benefit from both the increase in asset value and the borrowed funds they used. This strategy is used by many wealthy investors and business owners. They focus on keeping their assets while using those assets to generate access to more capital. The key difference between this approach and the traditional mindset is how money is viewed. Most people think in terms of income. They work, get paid, and spend. Wealthy individuals think in terms of assets and leverage. They use what they already own to create more opportunities for growth. Another example is real estate. When someone buys a property, they usually do not pay the full amount up front. Instead, they take a mortgage, which is a type of loan. Over time, as they pay down the loan, they build equity in the property. At the same time, the value of the property may increase. This creates a situation where they are building wealth through both repayment and appreciation. All of these examples show the same principle. The financial system is built on the movement of money through borrowing, lending, investing, and growth. The people who understand the system are not necessarily working more hours. They are simply using the system more effectively. And that is what creates the difference in financial outcomes over time. Now that you have seen how the financial system actually works, the most important question is this: what should you do with this knowledge? The biggest lesson is simple. The financial system rewards understanding, not just effort. It is not enough to work hard and save money. You need to understand how money moves and how to position yourself within that movement. Start by changing how you think about money. Instead of seeing money only as something you earn and spend, start seeing it as a tool. Money can be used to create more money when it is placed into the right assets and systems. This means shifting your focus from just income to building assets. An asset is anything that has the potential to generate income or increase in value over time. This can include stocks, real estate, businesses, or other investments. When you own assets, you are no longer relying only on your time and labor. Your money begins to work for you. And over time, this creates a compounding effect where your wealth grows faster than it would through saving alone. Another important lesson is understanding the role of leverage. Leverage simply means using borrowed resources to increase your potential return. This could be through loans, investments, or even other people's time and expertise. When used carefully, leverage can help you grow faster within the financial system. But it also requires responsibility. Poor use of leverage can lead to financial risk. So the key is to understand when and how to use it wisely. You should also think long-term. The financial system is not designed for instant results. It rewards consistency, patience, and strategic thinking over time. Short-term thinking often leads to missed opportunities. Long-term thinking allows you to benefit from growth, compounding, and market cycles. Another lesson is to understand risk. Every financial decision carries some level of risk. The goal is not to avoid risk completely. The goal is to manage it. This means making informed decisions, diversifying your assets, and not putting everything into one place. Finally, the most important takeaway is this: you do not need to control the financial system. You just need to understand it well enough to make it work for you. Most people will continue to follow the same path of earning, spending, and saving without questioning how the system operates. But once you understand how money flows, you can start making decisions that align with that flow. And that is where real financial progress begins, because when you understand the system, you stop reacting to money. You start directing it. If you found this breakdown helpful, then you are already on the path to understanding how money truly works. But this is just the beginning. The financial system is a deep and powerful topic, and the more you learn about it, the more control you gain over your financial future. Concepts like investing, leverage, assets, and money flow are not just theories. They are tools that can completely change the way you approach money. If you want to continue learning in a simple, clear, and practical way, then make sure you subscribe to the Geeky Investor.